You see that your analysis that will help you pick a bias on whether to buy or sell in the market. Don't joke with it. That your top-down analysis. Don't get too lazy to do that. It is important for you to know what is happening in the market, what each time frame is telling you before you now decide to either buy or sell. You need to also know when to stay off, and you can be able to know all these things with your top-down analysis. So don't get too lazy to do your top-down analysis. This video is going to be very short and straight to the point because it's a very simple topic. Top-down analysis, but most traders don't know how important this is. So let's go to the chart and I'll show you guys what each time frame has to offer. Let's go to the chart. All right, traders, we're going to use GBP/JPY to do this, and currently market is open, so we are just going to do, a general analysis. This is just how I approach the market. Now, once I open the chart, I start by looking at the daily time frame. Now listen to this. What does the daily time frame do for me? Now the daily time frame is here to show me the general bias. Where is the market pointing to? So if I'm trying to read the structure, you see the daily time frame. It's here to tell me where the market is directed, where the market is reacting to, and the next line of action. So it shows me the trend generally. So now, from the daily time frame, I try to map out the obvious levels. Another thing you also need to pay attention to is that you don't need to go too far. Let's say you want to read the structure on what is going on GBP/JPY or any commodity you're trying to trade, and you want to start from here, or you want to zoom out and be looking for what is not necessary. You just need to pay attention to the recent zones. Now, from this chart, what can we point out as the recent zone? Now, if you check from the current market price, you can see that the market is tilting to the downside. That simply means it is reacting somewhere. So we just need to look for where the market is reacting to and know why price is reacting there. So if you check, we have a strong resistance level here, which is actually where price has tapped into and where price is reacting to. So noting that this is the resistance level that is holding the bias, because now if you check from here to where the current market price is at, you will know that price has been bullish. And I don't also expect you to come and start from here and start mapping out the break of structure, and the origin. All these things, they've played out. You just need to focus on the recent level, so you won't waste your time mapping out what is not necessary. So now we've mapped out where price is reacting to, which is very important to the trend. Now, the next thing will be to map out the break of structure. So now the next thing we're going to do will be to map out the recent break of structures before price tapped into the resistance level. So now you can see before price tapped into this resistance level, like I stated earlier, price has been bullish, and this was the last break of structure before price tapped into the resistance level. So this being the last break of structure, you map it out. Don't just say it in your head, okay, there's a break of structure there, you move on. No, map it out. It's important you do what? You map it out. Now, once you map it out, you look for the origin that caused that break of structure. So you can see it's also obvious here. This is the origin that caused the break of structure. And now you can see price has touched that origin. Price tapped in and pushed the market up, but this resistance level did what? It's still pulling it back. That is the only thing you need to point out currently from the daily time frame. This is what is important at the moment. This resistance level and this demand zone that price has tapped into. So literally from the daily time frame, what we'll have here, price is giving us a range. The market is bullish, but then there's a stumbling block, this resistance level, and then there's also a stumbling block for the sellers, which is this demand zone. So we'll now go down to 4-hour time frame. Now coming to 4-hour time frame, 4-hour time frame is also there to give us general bias, but then we also need to read the internal structures of 4 hour time frame. You know that the daily time frame is more summarized than the 4-hour time frame. So now from 4-hour time frame, what can we see? When you come to 4-hour time frame, you just need to note, pay attention to the only place you've mapped out from the daily time frame. So that simply means just this point inside here, nothing else. Because if you start looking for something here, it's not necessary. All these things, they've played out, and at the moment, it's not necessary. So you just need to focus on the recent structure and the current market movement. So now, this was the origin we mapped out from the daily time frame. Now, from 4-hour time frame, what can we see? You can notice that from 4-hour time frame, the origin is now here. If we refine it to 4-hour origin, you'll know that it is now here. So this is what we have. And we also have something below. This was the last break of structure here, BOS. And then we got a change of character here. We got a change of character here. So now the origin that caused this change of character is what is here. So that simply means this one is also important, but you can see price is very far from it. So we'll just leave it pending. We're leaving it pending so that we'll know something is there when price will start pushing down to this point. But before price will come here, we know that price will have to deal with this first. So from 4-hour time frame, this is what we have. But then something is also happening inside here. Now don't be too quick to say it's ranging inside here. No, something may be happening inside here. So you also need to break it down. Now, where you break it down will now be your 2-hour time frame. When you go to 2-hour time frame, what is happening inside this movement? This is now where you start mapping out the internal structures, because the daily time frame, like I stated earlier, well summarized. 4-hour time frame, well summarized. But then when you start going lower to 2-hour time frame, 1-hour time frame, 30 minutes, 15 minutes, that is now when you start paying attention to the internal structures market is creating. Because if you take your entries from the lower time frames like 1 hour, 30 minutes, 15 minutes, you need to pay attention to the internal structures, because that is where your entry will be hiding. So you don't need to play with it. Don't just view it as nothing is happening here. Something may actually be happening there. So now this resistance level, we need to refine it. So for 2-hour time frame, we'll still keep it here, having it in mind that price is reacting to what resistance level. So from this internal structure, I can see something. Now, I can see that a break of structure occurred here. A break of structure occurred here. And now, price, this being the origin, price cleared liquidity and reacted off what? This FVG. Because that's what I can see here. Price reacted off this FVG at this point to push up. Pushing up, it also dished out a new break of structure to the upside. A new break of structure to the upside, which still tapped into this resistance level and dropped the market. Now we have an origin here. Now, this particular origin, price has mitigated it. So we are expecting it to break. Now, we are done mapping out what is necessary from 2-hour time frame. We'll move to 1-hour time frame. Now, from 1-hour time frame, like I stated, what we are doing now, we are looking for possible points we can start taking our entries from. Once we get to 1-hour time frame, we are looking for where to set traps, you can set your traps, get points of interest, and then go down to the lower time frame to refine it more. So from 1-hour time frame now, we are looking for possible, points of interest. So we've mapped out this from 2-hour time frame, and it's pretty much aligning with 1 hour time frame, but then there are still tiny structures we need to pay attention to. You know, how market was able to push down, how it is reacting here, and the rest. So now, after this break of structure, you know, this break of structure is kind of summarized. So now I'm going to move it to the last internal break of structure that happened before price tapped into this resistance level again. Now, after this last internal break of structure, you can see change of character occurred here. So now, this change of character, we have the origin that caused this change of character to be here. So from 1 hour time frame, I think that is what is, you know, very obvious. Now, what is now happening inside this box, the one we have here, that is this one, we'll get to know from 30 minutes and 15 minutes. So another thing we also need to refine is this our origin. So let's refine it to 1 hour time frame origin. Now, if you check from 1 hour, yes, we have an origin that we've mapped out and we've been refining it from the daily time frame. But now from 1 hour, you cannot have this order block here and you will be so comfortable to take trades from here when this one is here. Price may likely clear this one as liquidity and tap into this one. So that simply means we'll take this one out and target this one. So now that is why your top-down analysis is very important, especially where you take your entries from. So we'll be targeting this one. Now let's move down to 30 minutes. 30 minutes, we just want to understand what is happening here. Now, after the change of character, what happened? Price tried, you know, to come back into the origin that caused this change of character, but that didn't happen. Instead, it reacted off FVG and price started dropping again. Now, as price started dropping, it didn't dish out, you know, major break of structures. That's why I would not map them out. Why? Because the break of structures, they are more of weak rejections. So a weak rejection break is not a strong break of structure. So now what we need to pay attention to is what, you know, price is doing here. So you can see currently this is where price is reacting to this origin. This is where price is reacting to. Although if we want to refine this origin to 30 minutes origin, it will be this point. So that simply means we should be expecting more drop on GBP/JPY. Now, from the push down, I can see that we have this tiny break of structure here, this tiny break of structure, and now we have a supply zone here. We have a supply zone here. So if we get, you know, a push up, that simply means a possible sell, you know, can happen from here. But then we'll have to go to 15 minutes. So now when it comes to 15 minutes is my entry time frame. That is where I set my traps. That is even where I stop. I go lower to 5 minutes, 3 minutes, 1 minute if I want to take confirmation entry. I've been able to drop a video on how to take confirmation entry. So if you've not seen that video, go ahead and watch the video after this one so that you understand what I do with 5 minutes, 3 minutes, and 1 minute time frame. So now from 15 minutes, you can see we have different origins we are waiting for. From 2 hour time frame, this origin has been mitigated. 1 hour time frame, this origin too has been mitigated. But now coming to our entry time frame, which is 15 minutes, you will notice that the origin has not been mitigated. So the origin is still here with FVG. So that simply means there is possibility that this origin will shoot the markets up if price should come here. So it's a possible point of interest for us. So all these things will be liquidity. Now, knowing that this origin is here and we also have the one below, you can see from 15 minutes, it is very far. So if you try to force this origin that we've been refining from the daily time frame on 15 minutes, you will notice that you will be waiting for this particular trade, and the week will finish and you will not still be able to catch any trade because you are waiting for an unrealistic point of interest, which is why your top-down analysis is very important. So now we are looking at 15 minutes, which is a very small time frame. So you need to pay attention to the current trend. From 15 minutes, before price will start coming to this one, it will have to deal with this one. So this is a possible point of interest. But then, before price will come here, a sell will have to happen. So now we also need to look for how to join that sell. And that is what I've mapped out from, 30 minutes time frame. And remember, 30 minutes time frame was, bringing all these things out as weak rejection. But now, from 15 minutes, you'll notice that it was indeed, or it is indeed, a clean bearish structure, because you can see we have a break of structure here. And price did what? Tapped into the origin and dropped the market again, giving us another break of structure here, So now, if we want to sell GG from 15 minutes time frame, this will be the right point to wait for it. You can see this is where the other block started from, so the entry will be there. This will be the right point, and with this I can have a trap here. Stop loss a little bit above the last week rejection, just like this, and then my target will be this demand zone. So that simply means I have two POIs. If the market decides to push up, I'm looking to sell from here back to this demand zone. Well, if the market decides to move from here without, tapping into this point, then I will watch out on what price will do here. I can decide to take an aggressive entry by just setting my trap, or I can go lower to 3 minutes or 1 minute and look for confirmation entry once price taps in. So that is why it's important for you to, break down what is happening on the chart, time frame by time frame, and know what each time frame is doing for you. So a quick recap: the daily time frame will tell me the general bias. It will tell me whether the chart is, filled with buyers or sellers, or if I should just fold my hands and watch. Same thing with 4-hour time frame. Now, from 2-hour time frame, I will start breaking down the internal structures the market is creating. The 2-hour time frame, 1-hour time frame is to break down the internal structures market is creating. I will start looking for possible points I can take my trades from. Now, from 30 minutes and 15 minutes, that is where I'm setting my traps. I will start setting my trap and wait for markets to tap me in. So that is just it. And have it in mind, don't force any POI from the higher time frame. Don't come, to force it into the lower time frame like 15 minutes or 30 minutes, because sometimes it will be very far, just like this one we have here. So when you come to the lower time frame, also read the structure of the lower time frame, aligning with the general trend you've seen from the higher time frame. So that is just how simple I keep my analysis. And you see this, I bring out my time to do it anytime I want to take trades, anytime I want to look at the chart, anytime, I open my chart to either click the buy button or the sell button. I will need to do this top-down analysis to understand what is happening on the chart before I will now take my bias to know whether I am selling to buy or I am buying to sell, or if I'm buying all through or selling all through. That is the importance of top-down analysis. Don't joke with it. All right, traders, thanks for watching. Don't forget to subscribe and do what? Turn on the notification bell, because more educational videos will drop. This channel is dedicated to help you become profitable. So make sure the notification bell is on so that you'll be the first to be notified when next I drop another interesting and important video. I'll see you on the next one.